Welcome back to Alpha Recap. I'm Brittany. Today we're unpacking a market day that mixed a real technology breakthrough in photonics with some cautionary macro and corporate headlines. As always, if you have questions, you can reach us at stockalpha.ai and ask via the Q&A feature.
Great to be here. Lots to get through from the trade tape today.
Let's start with the big tech story. Poet Technologies put on live demos today at OFC 2026. They showed 3 products, headlined by something called Blazar, an external cavity laser. Tom, why did that matter so much?
Because this is the difference between a roadmap on a slide and hardware you can actually touch. Demonstration moves the company from maybe to maybe but now testable. It reduces what analysts call vision risk and shifts the conversation to execution risk, manufacturing, yield, packaging, customer qualification.
So, what really stands out here is the path forward. Demonstration to trials to volume. That's where timelines can slide, right?
Exactly. The sequence is demo, customer trials, qualification, then volume production. Each step can reset expectations. The Blazar is framed as a cost curve bet. If they can make it cheaply at scale, it changes the math for AI data center interconnects. Right.
Walk us through why photonics matters in plain language.
When you step back and look at this, photonics moves data as light instead of electricity. That means lower power use and potentially much higher bandwidth between servers in AI data centers. If it scales, it helps with energy bills and performance as models get bigger.
Honestly, I was a bit surprised by this one.
Yeah, that tracks. Demonstrations at conferences can be staged, but 3 live products is meaningful. Analysts are now split between optimism about de-risking and skepticism that demonstrations guarantee manufacturing economics.
Okay, big tech note logged. Now, the other main thread today was macro, PMI data, and geopolitics. We had S&P Global flash PMIs out. Tell listeners what landed and why the internals mattered more than the headlines.
The headlines showed expansion. Manufacturing came in at about 52.4 versus a consensus around 51.5, and the composite was about 51.4 with services at about 51.1. On the surface, above 50 signals expansion, but the detail is where the message was softer.
So the growth was narrowing?
Yes, new orders and employment components were weaker in services, and breadth was shrinking. That pattern says momentum is cooling, even if the headline stays above 50. And some analysts flag the Iran conflict as a risk that could re-accelerate input inflation through commodity and supply chain channels.
Hold on, say that again? How does a geopolitical event like the Iran war show up in these numbers?
It shows up as volatility in commodity prices and potential supply chain shocks. If oil or key commodities spike, input costs rise and margins get squeezed, especially for goods-intensive firms. That, in turn, can feed through to services and hiring decisions, which are reflected in PMI internals. Noted.
Switching gears. Corporate event flow was busy. We saw a bunch of 8K filings from names like Turn Therapeutics, FTC Solar, and Actelis. What should folks be watching in those filings?
These filings can reveal material agreements, new financial obligations, or Regulation FD disclosures. For smaller companies, a new debt agreement or contingent liability can change risk profiles quickly. Specific filings today disclose material definitive agreements and new obligations. Those details live in exhibits, so parsing pricing, covenants, and effective dates matters.
Right. And the other thing is tour letters. Like Tourlight Capital's fourth quarter note showed weak near-term returns, which is a data point for holders of aviation and specialty finance exposures.
Correct. Tourlight flagged just about 0.2% in fourth quarter performance and roughly 2.8% for the full year. That suggests limited near-term returns in that niche, which is relevant if you own names exposed to aviation finance.
Short reaction? Lots of filings today.
Yeah, absolutely.
We also had some corporate partnerships. FedEx expanded same-day capabilities with OneRail. Why is that significant?
Logistics premiumization. Time-sensitive last-mile services command higher pricing, but they require dense routing and strong orchestration to be profitable. Partnering with OneRail lets FedEx lean on technology to improve same-day coverage without building everything in-house. It's a defensive move in e-commerce competition.
Got it. And C-Money launched a Taiwan data gateway. That was framed as a big deal for quants. Explain why.
The Taiwan equity market is about $2.5 trillion and is heavy on hardware and semiconductors. Access to localized data, corporate filings, liquidity metrics, sector specifics, lets quantitative managers build more precise factors and cross-market strategies. It's about expanding the investable universe with better inputs.
So, what really stands out here is that market structure changes the playbook for systematic strategies.
Exactly. New data can shift correlations and require model recalibration.
Let's talk divergence in analyst views. On one hand, folks at Poet's demos were a major de-risking. On the other hand, some cautioned it doesn't guarantee scale. Where does the balance sit?
Proponents say moving from slides to hardware accelerates customer conversations and shortens sales cycles. Skeptics point out manufacturing yield, packaging, and qualification timelines are the sticky parts. The correct reading is middle ground. Demonstrations are meaningful, but commercial scale is still a multi-step process with execution risks. Right.
Quick hits before we go deeper. There was also speculative media around a potential strategic move involving an infrastructure firm and a power plant operator. Analysts treated that as rumor until filings arrive. Keep watching for any S4 or 8K.
And that's important. Rumors can move prices, but they can reverse quickly if no regulatory filings back them up.
Let's give listeners practical monitoring points. What should different investor types track this week?
For growth and AI infrastructure investors, watch Poet for customer trials, qualification announcements, and early purchase orders. For event-driven players, only treat speculation as a catalyst once you see regulatory filings. Income investors should monitor how inflation and margins affect distribution coverage. Quants need to evaluate the new Taiwan feed for latency and coverage. Credit investors should parse 8K exhibits for covenant language and new obligations.
So, what really stands out here is the interplay. Tech progress on one side and macro plus corporate noise on the other. That makes positioning tricky.
It does. The tape today showed that markets were sorting technology execution from macro fragility. Analysts suggested differentiated positioning, backing structural themes like AI infrastructure and logistics orchestration, while watching PMI internals and filings closely.
Quick reality check. Any hard numbers that folks should remember from today?
Manufacturing PMI was about 52.4, composite about 51.4, services about 51.1. Torlight's fund returned about 0.2% in the fourth quarter and roughly 2.8% for the full year. And Taiwan's market size is about $2.5 trillion. That's the scale C-Money is opening up to quants.
The number that really caught our eye was the manufacturing surprise to the upside, even as services softened.
Yep, that divergence is the story.
We promised quick reactions, 2 or 3 lines each. First, Tom, 1-sentence takeaway on Poet.
Demonstrations meaningfully reduce technology risk, but scale economics remain the key open question.
Okay, 1 sentence on the PMI print.
Headlines showed expansion, but internals flagged narrowing momentum and inflation upside from geopolitical risk.
1 sentence on the corporate filing flow.
Elevated 8K activity means vigilance. Pass exhibits for covenants and effective dates.
Final segment, clear takeaways for listeners.
First, demonstrations are important but not the end of the story. Watch the qualification and manufacturing milestones. Second, read PMI headlines with caution. Look under the hood at new orders and employment. Third, treat rumor-driven corporate action as a contingent catalyst until filings show up. And finally, new data access, like Taiwan feeds, can materially shift quant strategies. Verify latency and coverage before assuming it helps your model.
Investment reminder, our discussion is informational only. Analysts note these developments and data. This is not personalized investment advice, and we're not recommending any action on specific securities.
Right, good to be explicit about that.
Thanks for joining, Tom. Quick closing line, where should listeners go if they want follow-ups?
Head to stockalpha.ai for the note links and filing references, and use the Q&A feature if you want us to dig into a specific 8K or data feed.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. I'm Brittany, and we'll see you next time.